If you're a high-paid tech professional, chances are your RSUs have made you a lot of money on paper. But every year, when they vest, you get slammed with a massive tax bill. And the truth is, most people in tech do not realize that's a smarter way to handle it. Instead of just watching half of your hard-earned RSU income disappear to the IRS, you can use those proceeds to build real estate wealth, generate strong cash flow, and legally reduce your taxes by 6 figures this year.
Let's talk about restricted stock units. It's a form of equity compensation that many tech employees receive as part of their total pay. And when the restricted stock units, the RSUs vest, they're converted into actual shares. And the IRS treats the market value of those shares as ordinary income on that day. So even if you don't sell the RSUs, the shares of stock, they're still taxable to you. If you have these RSUs and they're generating a lot of taxes, quite often you can purchase a short-term rental, do a cost segregation study, which we can discuss a little more, but in a sense, we're accelerating the timing of these tax deductions, creating some paper losses that can be used to offset the RSU income.
If a tech employee takes a portion of their RSU proceeds and invests in a short-term rental, what does that actually look like in practice from a tax savings perspective?
Yeah. So, if you're to sell $200,000 in RSUs and use like $100,000 of that as a down payment on a $500,000 short-term rental, and then you do a cost segregation study and you claim bonus depreciation. Again, the goal of a cost segregation study is to accelerate the timing of your depreciation deduction. So normally the short-term rental would be depreciated over 39 years, but there are components that can be carved out and depreciated much more rapidly. If you were to do something in 2025 and onward with Trump's changes to the tax bill, you can immediately deduct those things. So the goal would be to carve out the land improvements, which would be like the driveway, the landscaping, fencing, retaining walls, irrigation systems, all those things, as well as the personal property, which could be the carpeting, it could be special purpose electrical, it could be the kitchen cabinets, other things like that. And from a tax perspective, you could immediately deduct those things. So, you could generate, a pretty significant paper loss in year one by doing a cost segregation study. And those losses can offset the taxes that you'd be paying on the RSUs. And again, you're going to have an appreciating property that's going to be generating monthly revenue for you.
Based on my experience with tech employees, they have built significant wealth through their RSUs, but they are really facing a large potential tax hit. And some of them actually concerned about single stock risk while looking for cash flow opportunities. And just to be clear, we're not talking about selling everything, but it's about protecting your upside by diversifying a portion of your portfolio while reducing your taxes. That way, your wealth isn't at risk in a single stock, right? Because so many times, like I heard, I'm holding Nvidia, Amazon, Apple, because it's still going up. We understand that, right? But we design our program for this situation. We can, help you leverage your RSU proceeds to acquire a high cash flow short-term rental that legally reduces your taxable income by 6 figures this year while generating, strong cash flow and diversifying your tech wealth.